Welcome to ForexTV.com. It's Monday, March 3rd. I'm Remy Hookie for your New York Forex Market Buzz. In afternoon trade, as of 1 p.m. Eastern Time, Euro dollar is at 1.5185. Sterling dollar is trading at 1.9836, while dollar yen is at 103.54. U.S. equities have pared back earlier losses following the steep tumble on Friday afternoon. Overnight and overseas, global equities declined, with the Nikkei falling sharply by 4.49%. Meanwhile, in today's session, NYMEX crude oil futures continue to top new records, earlier hitting 103.95 a barrel. And taking a look at U.S. data releases, the Institute of Supply Management's Manufacturing Index came in slightly better than expected at 48.3. Market forecasts had expected a reading of 48.1. Meanwhile, the Commerce Department reported that construction spending fell by the sharpest in 14 years. The January figure declined 1.7%, following the downwardly revised 1.3% in the previous month. This afternoon, I'm joined by Mike Moran, currency strategist at U.S. Standard Chartered here in New York. Good afternoon, Mike.
Good afternoon.
Thanks for joining us on this Monday afternoon.
Thanks for having me.
Well, so we're starting out the week with yet more records in FX as well as in commodities. Overnight, we saw the yen soar against the dollar, with speculation rising that the pair could break 100. But first and foremost, euro dollar has pulled back below the 152 level in afternoon trade, but there's plenty on tap in terms of event risk. So, Mike, fundamentally and technically, if we could start out with your forecast for euro dollar.
Yeah, euro dollar. I think we're struggling to sort of sustain that rally above 152 at the moment, and clearly we see some good offers around 52.50, and it really is still, I think, very much a dollar story here. Just looking at commodity markets, you're looking at the gold and oil really catching the FX markets' attention here, and there's all points to one thing: the markets are concerned about inflation, and they want to be in non-dollar assets at the moment, and for that reason we're still seeing the dollar pretty much weak across the board here, and if you are a yield driven investor, which many still are, looking at the euro and the dollar spreads is still heavily favoring the euro.
Okay, let's move on to price action for dollar yen as well as the yen crosses. Not surprisingly, risk aversion is up over speculation of a slowdown in U.S. growth, and also on negative news from the financial markets. But Mike, for the yen against the majors, what's your outlook in the short term as well as in the coming quarter?
Well, you have to be concerned if you are a yen bear that the really risk appetite has been soft. It has been volatile. We have had brief periods of FX outperformance in some of these yield currencies, but ultimately we're entering a period where the economics and the price action is not particularly favorable for some of these for the yen currencies, and I think others are looking to other potential funding currencies to match these gains. So ultimately, people are talking about 100 for dollar yen now, but I suspect that once we get closer down there, the specter, the threat of intervention from the Japanese is going to provide a lot better support.
Okay, and let's shift our focus over to our neighbor up north and look at the loonie. Earlier, CAD fell after the release of Canadian Q4 GDP, which came in at 0.8% at an annualized rate and fell 0.7% month over month. But looking ahead to tomorrow's session in the morning, the BOC is expected to ease by 25 basis points, with some calling for a 50 basis point cut. But Mike, what are your expectations ahead of the morning rate announcement, and what does this mean for dollar CAD?
Again, I think that the U.S. dollar moves here are probably going to be dominant here. I think most of the good news for CAD have probably been priced in right now. So we are looking for some correctional movements over the next week or two. Like I said, the commodity markets has been doing quite well, but that has actually been forced us below parity for some time, and the fact that the rate rates are moving against the CAD now, I think does soften up the profile. So I think we're going to stick in this, 96 to probably 105 range for the next few weeks, with the bias of a softer CAD.
Okay, and last but not least, if we could take a look at cable as well as the high-yielding Aussie dollar. Earlier we saw cable against the dollar reclaim the 199 handle, but has pulled back in afternoon trade. But we also do have the BOE rate announcement on Thursday. With Aussie now above the 94 level, what's your outlook for the currencies of the Aussie as well as sterling against the U.S. dollar?
Well, I think sterling and Aussie are very different currencies at the moment. Starting off with sterling, the Bank of England obviously meeting, I think will probably not give us the rate cut that some of the bears are actually looking at. But clearly we've struggled to get back significantly above 199, and I think technically that does start to question whether this rally in sterling actually has legs. So we actually prefer to be short sterling here, given the potential pullback. But the Aussie is quite a different character right now, with the RBA still one of the few central banks actually hiking rates into this into the Fed cuts, and so we expect to see the Aussie continue to find good support, probably a buy on dips for the next few weeks as commodity markets are also fairly supportive of where the Aussie is.
Okay, Mike, thank you very much for insight and analysis this afternoon, and have a great week. This has been your Forex Market Buzz with Mike Moran from U.S. Standard Chartered. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.